Hello, everybody. Welcome to today's episode of The Daily Dose. Today is Friday, November 11th, and we saw a continuation of what happened yesterday. Stocks are moving upwards. The market is becoming optimistic that the Fed is going to start becoming more dovish and that they're going to slow down when it comes to their rate hikes and monetary tightening. The Dow Jones was up 0.1%, the Nasdaq was up almost 2%, and the S&P was up almost 1%. U.S. stocks extended a dramatic ascent on Friday after deceleration in CPI inflation data ignited the most intense rally on Wall Street since early 2020. The S&P 500 rose 1%, while the technology-heavy Nasdaq gained 2%. A reversal in China's zero-COVID policy to reduce the amount of time in quarantine travelers to the country spend buoyed sentiment in early trading, so we're seeing some policy shifts internationally as well now. Oil markets advanced as traders speculated the move may stoke a boost to commodity demand, with West Texas Intermediate futures bouncing nearly 3% to above $88 a barrel. Nothing really significant data-wise. The consumer sentiment came out today. It was a little bit less than expected, but it could be kind of a lagging indicator. I don't think there's anything else I want to talk about in this article, but I do want to get into the charts because the S&P 500 has broken through the zone, and now I see the 200-day moving average being that next level of resistance, and that's going to be huge. I'm going to be watching this really, really carefully to see what happens here, because if we break through the 200-day moving average, that adds a lot of validation to this rally that we're seeing. It adds a lot of credibility, and I think it would be tough to come back below that 200-day moving average if we break above it. So I'll be looking at that carefully. Obviously, that's a huge indicator when it comes to these types of markets. Other than that, really nothing to talk about here on the S&P 500. Obviously, we're making a series of higher lows and higher highs. Really bullish looking on the S&P 500 right now. Obviously, we have the 200-day moving average and the trend line to think about. And if we bounce off of either of those and continue down, then yeah, we could definitely still see. Honestly, we could still see the 3250. I know that might seem extreme to some people, but what happens next month if the Fed says at the FOMC meeting that they're not slowing down still and they need more than one data point? Then we're headed down. So that's just what I'm looking at on the S&P 500. But let's talk about Bitcoin real fast. So now that we have a couple days behind us, it makes sense what Bitcoin did yesterday and what it's doing now. So we broke through this aggressively and came back up to the top of our zone, and now we're kind of selling off again. Obviously, breaking through this range is a big deal. You see that now it's kind of testing this area that it acted as support for so long, and now it's acting as resistance. And honestly, I'm surprised Bitcoin's not lower with all the things going on in the crypto world. Obviously, FTX today declared for Chapter 11 bankruptcy, and BlockFi announced that they were pausing withdrawals. And I saw something today as well that BlockFi allegedly had upwards of 90% of their customers' assets on FTX, and obviously they're not getting any of that back. So if that's true, BlockFi is also going bankrupt, and that would be very, very bad for the crypto world. Just a big step back when it comes to perception. And this is why you shouldn't have crypto on exchanges anyways. If you still have crypto on an exchange, even if it's Coinbase, take it off. Get a ledger or some sort of cold storage hardware wallet and put your crypto in cold storage. Be in full custody of your keys and your crypto and your wallets, all of that stuff. You can't mess around with the exchanges because they don't have to give you your money back when stuff like this happens. And you don't actually own the crypto. If you own Bitcoin on Coinbase, that's not your Bitcoin. What happens if Coinbase says you can't log into your account anymore? That's not your Bitcoin. Not your keys, not your coins. Take custody, because that's the most important thing. That's what's so great about this asset class, and it's what people aren't utilizing, and you see the dangers of not utilizing it. So that's my little spiel about Bitcoin in the crypto world. But yeah, Bitcoin definitely looking really bearish here. Definitely still expecting this 10,000 range here. So that's what I'm looking at on Bitcoin. Obviously, stock market's looking definitely a lot different than Bitcoin. It's looking really bullish. We're approaching this 200-day moving average. That's what I will be looking at, as well as the trend line. If we break through both of those, that's a signal to me that this technically the bear market is probably over and we'll be moving higher. Maybe we go into a range, but I wouldn't expect us to go lower than the lows. To me, the bottom would be in if we break above the 200-day moving average and the trend line, then to me the bottom is in. I'd be surprised if we make anything lower than this right here. But yeah, that's really all I have today. I appreciate you listening or watching to this episode. If you like this type of content, please follow wherever you listen to podcasts. Please subscribe on YouTube. There'll be an episode coming out this weekend. But other than that, really appreciate it. There was a big week this week, a lot of news, a lot of events, a lot of stuff happening in the markets. I'm sure it'll be just as crazy next week with all this volatility going on. Will we rally into the 200-day moving average next week? Will we rally into the trend line? Will we go above it? Will we bounce off of it, or will we come back down? Will we go in a range? Will we break below and head to the 3250? There's so much that can still happen on this market. It's exciting. And we'll just have to wait and find out. But until next time, thank you for listening, and I'll see you in the next one.